Hello, everyone. Good morning, good afternoon, and good evening. It looks like everything is green today. Okay, just a moment. Microphone. I think right now will be much better. So, it seems like we are still in the choppy market condition. Technically, and that's one thing um that's really good for making the trading plan for today or this week is doing all the preparations in the weekend where the market isn't open, and you can really analyze the picture, analyze the condition more rationally. And yeah, so these are the numbers of the leading, mediocre, and lagging number of stocks in these three watch lists. I believe 2 weeks ago, the number of like the leading and the lagging watch list, the number should be like uh, should be flipped. The leading one should be 50 something and the lagging one should be 20 something or maybe like 30 something. But you know what I mean? A lot of the stocks are not looking great. I mean, especially in the tax universe. I know there are lots of stocks in the defensive sector or like the energy, financials, biotechs, etc. They are, I think, many stocks in those sectors are much better than the tech stocks. But yeah, I'm not a fan of trading them, so I'm just gonna focus on the mostly the tech names. Yeah, although I will still keep some stocks in the defensive sectors in the other sectors inside the watch list, like to give me a sense of uh or what are they doing. But I'm just, if you look at all the previous leaders, or maybe the tech names, just the tech names, I think most of them have made a move in either like late 2024 or the or this year. I have very little confidence or interest on in the long side. Very little. So yeah, I got some questions on today's gap up and asking what do you think about this gap up? Uh, I mean, what do you think? What do you think? Uh, that's not an important question at all. Again, like, what do you think? Question is irrelevant. What do the market thinks is the most important, and how can we know that? The price. So I mean, for example, if we're talking about SK Hynix, yeah, probably I may lower the stop. I think I would still be in the stock if it doesn't break out from the anchor VWAP or this gap down, this unfilled gap um, on Friday. Maybe yeah, most likely, I believe, and I doesn't care what the news are doing, what other traders, other analysts are thinking about, or like making claims, and it really doesn't matter, or it's just irrelevant to me, to my decision making, and I believe it's also easier and simpler to for my trading too. Yeah, but having said that, I'm also tracking the names that is showing relative strength, and I would also like to monitor the other side, like the more bullish names, because right now we're still in a medium term uptrend. That the weekly was still well above the 21 EMA, or maybe not well, still above the 21 EMA, and also there are some names that are looking great and are always trying to be open minded. And when the things really turned around, I don't want to be narrow what's that phenomenon called? Narrow vision? Yeah, probably. They're stuck in the narrow vision, and yeah, but one thing worth looking looks interesting that is in the weekend is Ethereum is getting a pretty nice push to the upside, which closed above the and this is the is the 13 EMA, I believe. But yeah, I just consider it as the 9 EMA, but yeah, technically it's the 13 EMA. Some names, some smaller cryptos managed to climb higher, but still a lot of the others, the other altcoins are still looking pretty bad. So I don't know. Consider shorting this MicroStrategy today. But I don't know. We'll see. Tunnel vision, yeah, that's the word. Yeah, that's the news in Hong Kong that yeah, he just talked about a 26-year-old trader. He took the company's money. They I think it's a investment firm or like a smaller investment firm, I believe, or just a brokerage firm. I'm not sure. And then he bought the leveraged SK Hynix ETF in Hong Kong with margin, so it probably gets more than like 3 or 4x leverage in SK Hynix. He probably also entered near the high, and now because the recent pullback, and he lost over 150 million Hong Kong dollars, which is around 20 something million US dollar. I think he should follow my Twitter, and he won't he can prevent this stupid loss. Anyone knows about him? Just send him my Twitter. ONDS looks pretty strong. Although weekly is still below the 9 EMA and also the 21 EMA. And there is a declining 150 and the declining 50 EMA above in the overhead supply. So, yeah, probably I may get stopped out, but it really doesn't. I don't know. On the daily, it definitely looks like a pretty like a bullish range, like a bull flag, but it's not out of the woods just yet. So IWM is looks like it found support and on the rising 9 EMA, and it's now back above the 9 and 21. SPY also looks but it's too early to say. It's still below the unfilled gap on Thursday or on Wednesday, like this around 747 level. So still a little bit too early to say, and yeah, the Qs is the weakest, and not even at the 9 EMA. And can AMD be a nice shot here? Why? Can you explain a little bit more why it is a nice shot here? AMD was a perfect short entry at the daily 9 and 21 EMA. And AMD is in the SOCX, which is a weak sector currently. 10 below 20 and lower highs, so declining. Yeah. Yeah, I agree, and maybe my reason is a little bit simpler. My reason of AMD today would be a good shot is plainly because there's a tight stop. So I can manage my risk very easily today. And I can get a pretty high potential risk reward. If semi sector as a whole or the general market as a whole continues its weakness, but definitely all, yeah, the reasons from you guys are definitely reasonable, definitely great. But to me, I think the it definitely is a little bit. It is the leader. The semi sector today may not be the best day for the shorts. That is a little bit extended from the declining 9. So the more extended, the farther away that you're from the declining EMAs, the lower your win rate will be. So it's not really a super like the entry that I'm very interested in. But I still think it's a great entry because you can easily manage the risk from the height of day, and then also it coincides with the 9 EMA. So what if the market did find its the strength and continues higher, and like to break out to trying to regain its ground to the upside, you're only maybe losing only less around one, like the stop is only around 1%. You could easily know you're wrong. And like yeah, if AMD reclaims the declining 9 intraday today, like if it failed this breakdown, if it reclaimed the into the high ground, generally it means you're probably wrong. Like there's nothing up there that yeah, that you will easily know you're wrong. Like that's not a really good actions for the shorts if it rallying up the high of day or even the 60-minute EMAs. So that's a really good, I think, really good entry. Well, you can manage risk tightly intraday. How would you manage on a gap up tomorrow? However, I cannot. Or maybe it's really hard. It's really difficult to manage a gap up for tomorrow. One thing is because I cannot watch till the close of the day, so I would say I can't really manage a gap up risk. But I think that's an advantage of the pullback short. Generally, if your entry was right, I mean was decent or was right in the sense that the market needs to prove it's right. That is, it shows huge resistance from your entry or on those resistance level, and continue slower. So if, for example, light after my entry, it rolls over and close near the low of day, it looks pretty weak. So I kind of have some cushions for a gap up, yeah, for tomorrow, for the next day. So you may say that is how I kind of manage the gap up risk. The gap up risk, the gap risk is you cannot completely avoid it, prevent it. There's no way. And statistically, your gap up and gap downs, like the probability of getting a gap up or a gap down is pretty similar. It's around the same. So they probably evens out. And yeah, that's it. How much cushions do you need to keep a position open overnight? I don't need any cushion. Do you use stops in extended hours and overnight? No. So if a stock gap up above my stops or below my stop, if I'm long, I will just let it execute at the open. If I was short AMD, I would probably cover it at the recent pivot low, since it is such a strong stock which doesn't give much risk reward. Uh, yeah, I think it makes sense. I agree too. Mm, like if your stocks is around 1%, actually it's like a 10 risk reward trade. It's actually pretty decent. Even if you decide to close it near the pivot low, I think it's around 465 level. Or if you decide to wait for the pullback into the weekly 21, that like it would be like 15 or even 17 or 18 risk reward. If it really happens, if the market really starts getting weak. Should I sell SK Hynix before the earnings? Yeah, actually, I don't know whether you are long or short, but it doesn't matter. Um, how about flipping a coin? Like you decide the head is hold, the tail is short, and then you let the coin decide. Is this a good advice? Like because both holding and selling are right. There is no definite answer. There is no definite answer. Because no one really knows and it always depends. It's really a probability game, and maybe it depends on how well you're doing this year. Like for example, if you're down this year and your SK Hynix trade is still profitable, like you're still um it's still a winning trade, then maybe it's better to keep to lock the profits in instead of potentially giving it back. Or I don't know, you may also consider like trying to trying to use the earnings as the opportunity of making all the losses back. But yeah, anything can happen. It's really it's really it depends. It depends. And but one important thing that is, do not um do not regret after you have made your decision. Like you can disagree, you can evaluate your decision after it happens, after maybe like a few days, a few weeks later, but do not regret your decisions that you have made at that time. Yeah, don't look back. don't look back in anger. I heard you say. Is Mara a good shot if it's break down day low? It's a good shot on the 5 minute candle breakdown. I think that this is the best entry. If you miss this one, I think this green like this 5 minute candle where it starts to bounce back into the declining EMAs. I think probably also the anchor VWAP from the highs or from the open is also a pretty good entry because yeah, I think I should have traded this one. I think this one is a pretty good short. The daily looks really nice. Intraday also looks pretty nice. Maybe a little like a if it can bounce back up a little bit higher would be better, but still it makes it a really good one. A really good shot on it, especially on the 60-minute chart. Yeah, unfortunately, I was a little bit early, and I got stopped out on Thursday. Boston Palantir shot, gapping into the 9 and 21 EMA. While IGV is rallying into resistance. Um, yes, yes, I think this is a really good one. Yeah, I actually think it's a really good one. Earnings next Monday. Yeah, but one thing worth noticing is that it looks like today we got some software names are showing pretty strong action so far, like gapping up above the EMAs. Yeah, but still, I think it's a really good shot. On the weekly too, a weekly pull back into the 9 EMA. Daily, the 9 and 21. Together with the sector weakness, and also this IGV is also pulling back into the declining 21 and the 50. So yeah, I think it could be a good shot. Well, so far we got a rejection of the declining 9. Even now, Russell is not looking good. So yeah, that's like instead of worrying about what will the market like what will the market do, or like um how's the news from Trump is gonna affect the market. It just really focus on the price itself. How'd you decide to short the stocks on Thursday? Actually, most of them are actually the semi names, and I think they all get the logic behind is the semi sector, the semi ETF is SOCX is rallying into all the EMAs, declining EMAs, losing the 50 EMA, first bounce into the declining 50. It just looks really shortable to me. And actually my stock selection is not really that important. I just identify the weak sector to short, and if you look at all the other the semi names, like most of them, they're going down since the first or Thursday. I think 99% of them. You just find any semiconductor names go down, go down, go down, go down, go down, go down. So it doesn't matter actually for which stock that I pick. Yeah, thanks for answering the question for me, Mustafa. I hope I I pronounced it correctly. Sorry if I'm not. I got a short watch list today. All of them are gapping up into EMAs. I would like to know how to prioritize which one to trade first. Oh, that's a good question. Yep, Nebius is definitely one shortable bounce into the declining 9. A coin is coin. Still, CN is, yeah, it's also pretty weak, although it's not gapping up. Really, it's not really gapping up at the open. So probably would not trade this one. I think Path would be the one that I'm least interested because although it's gapping up into the declining EMAs, but you can see in the past few months it's going sideways and no really clean or sustainable trend that has formed in the previous months. So yeah, Path is the least. Yeah, I don't like shorting here. And I think the rest are pretty good, especially Nebius. I think apart from Nebius, a lot of the semi names they're also gapping up into the declining 9 today. I think most of them are shortable. Like this TER also gapping up. Especially I think the 60-minute chart is a better reference when the 50 EMA starts curling down, the 9 below the 50 and the 21 also curling down, and then any other bounce into the declining EMAs, the resistance level, and after it really found, like maybe sometimes I would anticipate the reversal, but most of the time, like I wait for it to find to show the weakness when it rallies into the resistance level. So if this TER continues to going high, going shooting higher, then like I think I won't consider shorting if it yeah, but I don't know. It really depends. Like the 150 is still trending down though. So yeah, I think it still depends. But yeah, I think shorting at the like this 60-minute 50 EMA, which aligns with the daily 9, is a really good entry. Would you close your short on SNDK here at 1300? Because it is a pivot support zone. Yeah, again, it's never wrong to cover your shorts into weakness. And yeah, I think here is a pretty decent level that yeah, I could peel some off. But I won't, I believe. A few reasons. The one is SPY and IWM is still not, it's still like maybe on day one on this reversal, on this downtrend. Like they're not even falling below the 50 EMA. So I don't see. I would prefer. I would prefer covering more when the market is also like the indices, the general market as a whole is also more extended into the downside. Like the Qs on last Friday, like it is pretty extended into the downside. And also, it reaches the previous swing low. So that's why I covered most of the shorts at the at on 17th. Yeah, on this Friday, this candle here, and right now Qs is in the no, maybe it's near the weekly 21. So yeah, but I think I could be wrong, but I think the risk reward of holding the shorts for bigger move for potential downside would be better. But yeah, but I could be wrong, and yeah, that's the trade-off that I would probably give back some profits. But yeah, I think managing position really again, no definite answer. It depends. Like selling into weakness versus selling into strength are, I think, are one of the debatable the most debatable, the most uh the rules that like they're a huge, they both have a lot of supporters, and both have their own merits and disadvantage. So it really, you need to really find the one that works for you. Also, maybe sometimes works for that particular market situation. SPY and IWM are starting deadly sense cues that weekly support which is conflicting, but you think the current environment favors holding the short, hence the cues weekly support is dismissed. Uh, Maybe not dismissed, but I think the bearish side outweighs the bullish side for the weekly support on cues. And again, like the 21 EMA is not a magic line. It's not a wall. Um, that 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 the price must respect. So yeah, there are definitely a lot of occasions that the price do not react to it and continue slower. So I I don't know. Although yeah, I don't know. I just think the yeah AMD is going lower. I'm just not convinced. Today would be the low of this downtrend. I'm just not convinced. Cypher is pulling back, and yeah, again, like Cypher, like this type of bounce looks pretty good, but it's a death trap. What a nice shot, actually. AMD, huge follow through, and yeah, there's sometimes you would get from a leader or like a stock with relative strength. After the weakness, the market weakness coming in, like maybe they will have a yeah will have a higher follow through, like a more follow through to the downside. Yeah, I mean, I got tricked by this type of bullish, bullish, bullish stocks, bullish pattern, bullish chart multiple times when the market as a whole, like the breadth is really worsening. The peers is really doing bad, really doing bad, and this is the one of the most uh trappy trap. I don't know. Like this is the bull trap that I have fallen into multiple times. How many percent your account growth this month? A lot. Martin, earlier you stayed neutral even though some software biotech data center names look strong. On Thursday, once those leaders started losing strength, you flipped bearish and began taking short in semis. How do you make that mental shift so quickly without anchor to your bias? One reason would be, although like there are some names in the software sector, maybe data center looks good, but there are just really a few. Even some names in this software sector is looking they are looking really bad too. Like they're still under the 50 EMA. Many of them are maybe still in the long downtrend under the 150 EMA. Only a few names, maybe the cybersecurity ones, or even like Zoom. I think one of the names that is gapping up a few weeks ago, 2 months ago, that is also pulling back. And now it's staying below the 50 EMA and now looks like going sideways. So maybe I'm not really neutral to in a sense. Like I think I'm slightly leaning towards the bearish side, but I think the odds are maybe like 40% bullish, 60% bearish at that time. And yeah, maybe maybe also like the short is not the short side the stock didn't rally, haven't rallied into the resistance. So I don't know how they would react to it. But Thursday, I think also Wednesday. Yeah, after I think Tuesday is the rally, and then Wednesday. It looks fine. But a lot of the names are actually not really like AMKR under the 9 EMA, SITM under the 9 EMA, TTMI slightly above the 9 EMA, but all the EMAs they're trending down. I mean, it just doesn't look right. It in a really bull market for a really strong bounce, it shouldn't like staying right here. At least I want to bounce into the declining 21 or even into the declining 50. How would a strong bull market looks like this? Like how would most stocks in the leading sector, or maybe semi is not the leading sector at that time, but it's still I think it's one of the major engine on this AI on this bull market, and I don't see any other potential leaders coming up that can replace them and then fuel the next leg up. And apart from that, I think on this week, yeah, the first week of June, I posted a tweet or that tells just no matter how good or bad you're trading, just take a rest and stay off the screen. and that, yeah, really, I think more the reason behind most like is I I really think that this move, I think a lot of the leaders in the semi sector and also the semi sector as a whole is really extended into the downside and having huge volume. Well, that is a really dangerous sign, a really dangerous sign for the short term. Like I don't know how it will consolidate. Like it can definitely go sideways, but at least it's not really a good time for the long side for the semi sector and maybe for the market as a whole too. Like semi is really the contributes a lot to the market strength to this bull market. And when the strongest sector is looking really dangerous, extended into the upside, huge volume, high volatility, white candles, and also the SNDK MU made like 2,000% move in certain month. Like it just has a much lower odds of for them to continue higher and leading the next uptrend. So I kind of like have this. They all adding up, and yeah. How about shorting HPE if it fails? I think it's too late. The indices is at the low of the day. I mean, even SPY and IWM is already down 1% intraday. It just, I don't know. It could work if the market becomes really weak and have a strong follow through to the downside, but it also have a really high chance of a even a weak bounce could stop you out if you put a put a put a stop that's not wide. Winning big on an ASML short took the 1 minute opening range lows. Want to let it run multi-day, but since I'm in the drawdown, I have to cover a bit. Yes, and it's really a progress. Like you gradually find your own way. After trying to sell some or trying to hold more, like you will find a balance in between for you. So maybe after this time, you found yourself better at holding more into the weakness, like trying to catch a bigger move, and yeah, I mean, just try it first, and then evaluate later. But it definitely also depends on the market condition, though. Like why did you decide to take your second trade of MSTR when you did it had a little bit of gap to the declining 21 EMA? Yes, and I mean again, no definite answer on that. And you can wait until it really touches the 21 EMA, and you can. And I think is uh um I don't know. I just don't like to wait. I don't know. And as long as my stop is tight, I'm going to try it out. Um, Also, I think the underlying reason is I got a um huge chunk of profit cushions and positive feedbacks from my short, so I can be a little bit more aggressive on my entries. So I believe I won't take this short. Um, maybe I'll wait for the 5 minute breakdown if I am in a drawdown. If I'm red in the year, I will not be this aggressive on in the entry. But yeah, and again, like any EMAs is not a magic line or something. It's like a zone. It's like a range. It's not it, it it's not exactly the price of the EMA would have a huge sellers up there, and it cannot get through an inch. Like sometimes it overshoots. Sometimes it came close, and it found resistance. And also I'm like using 21 EMA. What if other people are using the 20? Maybe right here is would be the exact position on the 20 EMA or the 19 EMA. Anybody out there use the 19 EMA? So it really doesn't matter. I believe, in my opinion, it doesn't really matter. Honestly, I'm getting a little bit worried about the market to start a deep correction or even a bear market. Hopefully, I'm wrong. Like, isn't Nvidia looks like a failed breakout and then starting to roll over after topping at the top, find the top before the kills? It's too early to say. Like, it's still above the 21. It's still near the 21 EMA. Man, this AMAX chart just looks really, really ugly. I don't know. This Texas Instrument too. Like this huge red candles up there. KLAC also. I I don't know. They just doesn't look right. I think I remembered. Um, some of you asked me, what do you think on Meta, on this giant base? I don't have any opinion on that, but one thing I think is something on either on this day or this day, and so in hindsight, I think you can see Meta found resistance and somehow rolled over. Just from this these several red candles, these several red days. I mean, there's a few observations on this one. Like, where did Meta find resistance at? Where did it starts falling? So we got the high on this candle, and where is this candle um rallying into? Yeah, where is this candle rallying into? And after the first gap down into the rising 9 EMA, go sideways, and then we start to see the fade um, on Tuesday and also the Wednesday. So where did Meta start turning down? Where would be the best best entry, best candle, best level to short? I think these are the really great questions that you can think about it and find out your answer, and it's very applicable to, like, it's not only on only like matters only a single stock. It really applies if you study a lot of many examples. That you can see there are a lot of them are really happening again and again. Yeah, so again, Google, like another chart I really looked at. Google topped, find the lower highs in on Thursday. Where is this? Where is the high of this red candle? Where did it push into? And after the first red, I think it's really hard to catch this turn, but like after the fade, after it shows some weakness, looking back, where can you short Google? Where is the best candle? When does it start to form the lower highs, and what gives you the best risk reward for shorting? And then you can zoom in and maybe to get a little bit more insights, or maybe zoom out on the weekly to get a little bit more insight. And you just trying to ask more questions and find the answer by yourself. So sometimes you may come across some charts like Amazon, which is a little bit messy. It looks a little bit choppy, and yes, and if you cannot like really spot any interesting observations in the chart, it's absolutely fine. Like if you cannot spot it and in I don't know, maybe 30 seconds, then it shouldn't be it shouldn't be really important, because I think a clean a clean level, a clear level for support or resistance should be really easy to spot. Like you can see it, and other people in the market can also see it. Like if you if you just keep staring it at a chart for like 30 seconds, and you cannot you still cannot like analyze it or find out something stand out to your eyes, then it's just don't bother it. Your Oracle, this downtrend, after it loses the 9 EMA, it just serves the 9 EMA all the way down for how much? For how many days? I think more than 30, 34 trading days. Like, down almost 45%. And if we flip it upside down, what does it look like? What does it look like? Stage 2 uptrend, cybersecurity stocks. Isn't it look similar? Isn't it? Quick sell-off, and then we claim the 9 EMA, find support at the rising 9 EMA. We got a gap up and a small pullback, but not yet. It haven't filled the gap yet, and then continues higher. So looking back, the best, like the potential, where can you really find the highest potential risk reward to me is where it reclaims the 9 EMA, and then we got the pullback. So this is simply like talking about the charts, but if you look at talk about the Qs back in early April back in early April, that the general market condition, you can also tell there are some leading stocks when the market is beating down. Like Marvell is doing good. Marvell is doing good, and maybe the semi ETF as a whole is like showing relative strength throughout the whole downtrend. And for the first few days of for the bounce, it is back above the 50 EMA, and it's like trying to set it. It is setting up into the above all the rising, maybe not the rising EMA, but the converging EMAs. it also helps you to spot the the character change, or like how strong could potentially the bounce is. Yeah, yeah, but if we're just looking at the chart, I think yeah, still I think the 9 EMA is a pullback would be a really good risk reward shot. Sometimes that the converging EMA, it could look good for both short and long. How do you decide which way, or do you just try and flip bias if other way around? Yes, I think sometimes it's hard, but I think it hugely depends on which uh which direction um is coming from. Like if we are talking about this bounce into the converging EMA, like you can see the prices has fallen below the EMAs, and right now it's the bounce, and the EMAs are trending down, especially the faster ones. So I definitely it can go both way, but the odds of going lower, like continuing lower, is just high. And maybe on the other hand, like for this too, it's also like converging EMAs, but the price um is falling. It's like it stays above all the EMA, is now falling lower, like it's now coming back. And although the shorter EMA is declining, but there's still, like, especially the 21 is still well above the 50. And in this case, I would say the also for of the upside is just higher than the downside. Apple, uh yeah, I think the only true market leader in the past month. It's actually a 20% move. It's pretty huge. I tried to short AMD on Monday, 20th, into declining converging EMA. Why why was it a bad trade? Um, nope, I don't think it's a bad trade. I think I think it's a good trade, despite it's a losing trade. But I don't know. Um but it's always in hindsight. So, but I think as long as the entry you're like near the 9 and 21, and I think it's fine. But maybe also some minor details, maybe considering the sector weakness, like the semi ETF is still quite extended from the declining 9 and the Qs as well. Not reaching the 9 EMA, so maybe there's a little bit push the odds a little bit in favor to you, and maybe just AMD is just too strong, like showing relative strength. So maybe more buyers stepping into that. It's just not the right time. But yeah, maybe next time, maybe like be a little bit more patient. But I don't think it's a bad trade, because sometimes like definitely the market can, if it's really weak, it can find resistance not before it reaches the daily 9 and then goes lower. It just not really a high probability play, but it did but it definitely has a possibility. So yeah, but the main thing is either, even if you miss this one, but can you catch, like when after stopping you out, can you manage to retry re-enter the shot when the market gives you the chance a few days later? Short MU on 23rd of July. Yeah, and is this, again, stop down? Is this the nature of shorting pullbacks? Yes, I think it did. It is. Yeah, I think it is. Like, I think 21st would be could be the potential reversal day. But sometimes you will never know. You will never know. As long as the market like is still hanging around, like staying below the 21, I will lean towards the short side. Um, Maybe even sometimes above this enter free web. Yeah, maybe, I don't know, maybe the 21. But and also, yeah, and also are there any potential leaders showing up at really strong price actions from the individual names? I don't think there is any from it during this bounce. Like, most of the stocks is rallying into the declining EMAs and then cannot getting passed through it, those resistance. So yeah, so apart from the chart, the single chart, I think also need to look at the the individual names too, like the outside, all the small components adding up the indices and the market. Like, I mean, the cues are coming from all the 100 stocks in the tech names, in the tech sector. So at the end of the day, they are all individual stocks, but they're just like adding up and have different weightings. So yeah, it's a probability game, man. It's hard. It's hard. If this is indeed the start of bear market for growth stock, we have plenty of setups coming up to short again. Again, be patient. There will be many bounces in between. Yes, definitely. So no need to chase, no need to FOMO, especially um, on the short side. How do you mentally prepare for multiple and continuous losses if you are not in chunk of profits? Yes, I think that's. I would also lose my confidence if I get get plenty of losses in a short period of time. So that's probably why I lowered my risk per trade too. Like it just makes me feel much more relaxing and at ease when I'm trying to make new entries, even though I got plenty of losing trades, got stopped out plenty of times. 7.5% is a little bit too much for me because I got a really low win rate and my stop is too tight for that. And yeah, but I did further tighten my stop this year, so I don't know. Uh, but I agree reducing the risk per trade is really helps, and just trying to nail the entry. Like if you really can find the entry that can give you a stop that is tight enough, like I don't think you can't really get a decent sizing. Yeah, I would like to short coin, but I run out of buying power, so I think that's that. And it always reminds me of don't chase or not being FOMO, because I often like um got not enough buying power when there's too much opportunities to look at. Yeah, so there's always another opportunities in the corner. Don't really no need to FOMO and chase. And I think having a small account and use low risk percentage trade would cause result in the commission fee making up larger portion of loss. Yeah, I agree. Like, I mean, if you have only like really small account, maybe only one K, 2K, 3K, maybe the commissions would be a quite significant portion, or like really eating chunks of your profits. Um, yeah, I mean, if you really have a tiny account, like maybe below 5K, then is then yeah, I agree that you could be a little bit more aggressive, maybe using more than 0.5% risk, maybe using 1% risk or 2% risk. But I mean, it's also pretty dangerous. You can easily, if you're trading the same style, exactly the same style as I do, like I would probably like you would get it, you would easily get a 20% drawdown, or even 50% drawdown. So but actually, I think the better way is, I don't know. I think the better way would be like um still using a small percentage, like um yeah, small percentage of your equity as the risk. Maybe like really using like 0.5% or even below, smaller than 0.5%, and just ignore all the commissions. Yeah, just ignore them, and when you're trying to calculate your performance, your profits, and try to take the commission away and see whether your performance, yeah, like to evaluate from by your true performance, like um extracting all the commissions and fees, and if you can do well, like if you can like really, I don't know, like uh, um after extracting all the commissions and fees, maybe you can still make a like a 50% return in a year, or even higher, maybe like, yeah, higher than 50% return. Then maybe you can gradually adding more money in. Like you don't need to put all the money, I mean, yeah, put all the money in the trading account at once, because you definitely have a higher chance of blowing up in the beginning of your journey. Or maybe you can be less aggressive on, on the entries. You don't need to take the fair ones or the good ones. You're only focusing on the really best ones. That could also be a direction to go. yeah, you have to be very selective with your setups, aggressive with sizing, but conservative with trade selection. I think that could be a way to go. So I'm gonna end the stream here. Thank you guys for coming, and we'll see you in the next one.